Hello, welcome to the European Open Briefing for Wednesday, September the 20th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we have relative stability ahead of the FOMC announcement later today. We are seeing quite a bit of caution by traders ahead of that announcement, and this comes despite the fact that we saw some very strong words by President Trump at yesterday's UN address to the General Assembly, where he threatened to destroy North Korea if the country continues to impose a threat to the US. We did see a small increase in the price of gold, but other safe havens such as the yen and Swiss franc were broadly weaker. The euro has managed to climb back above the key 1.20 level, and this comes despite the fact that Reuters report is suggesting signs of a split within the ECB governing council on how to go ahead with its exit from its stimulus program. Sterling has seen some fluctuations over the past day amid speculation about the Foreign Secretary Boris Johnson, while the Aussie and the Kiwi are both firmer against the greenback this morning. So let's begin with the US dollar. We can see that against the yen. Dollar has been holding near yesterday's 2-month high of 111.87. The dollar index has been drifting lower, currently trading around 91.76. This is due to a stronger euro. The FOMC announcement is at 18 hours GMT today, and we will have a press conference by Janet Yellen at 18:30. We will likely see an announcement on a balance sheet reduction plan that's been well communicated in the past few months, and rates are likely to go up. The Fed will likely pause this rate hike until it sees the impact of its balance sheet, and there have been speculation that given the recent low inflation readings that the Fed might forego a third rate hike this year altogether. So it's going to be important to see what the latest dot plot chart is going to show about the latest projections by FOMC members, and whether they still see the likelihood of another rate hike this year, and of course how many rate hikes they expect to see over the next couple of years. So the dot plot chart will likely get more headlines than the actual balance sheet reduction plan, which is mostly been priced in by the markets. Moving on to gold now, because we are seeing continued uncertainty, geopolitical tensions regarding North Korea. President Trump gave his first address to the UN General Assembly yesterday, and he used very strong words, saying that if it is forced to defend itself or its allies, the US will have no choice but to totally destroy North Korea. This, of course, raised many eyebrows among world leaders, but the impact in currency markets was rather muted. We have seen gold rise to around 1,314 before retreating slightly to 1,312, as the main focus is in fact the Fed, the FOMC decision, than anything else, at least for today. Moving on to European currencies, the euro did manage to climb above the 1.20 level. It's currently trading just below that level. It also managed to reach a new 2.5-year high against the Swiss franc, hitting 1.1563. So that is again another evidence that there's been little risk of coming off from President Trump's speech yesterday. But we have there was a Reuters report that ECB sources have told Reuters that there is a bit of a split between governing council members, where some want to go ahead with planning the end of the asset purchase program, while others want to continue with asset purchases for the foreseeable future, but at a lower monthly rate. So now it is looking possible that in October the ECB, even if they do announce a reduction in the monthly asset purchases, that they might not set an end date, keeping it open-ended. Though the impact, you would expect that to be negative on the euro, but in fact the euro continues to edge upwards against the dollar. Looking at the pound, on Monday we saw a big drop in the pound after the Bank of England Governor Mark Carney said that any rate hike would be limited and gradual, coming off its 15-month highs above $1.36, and since then it has been fluctuating around the 1.35 handle. This is on speculation about the fate of Foreign Secretary Boris Johnson, who apparently is in disagreement with the Prime Minister Theresa May over the type of Brexit deal the UK government will be seeking. Boris Johnson is in favour of a harder Brexit, whereas Theresa May now appears to be moving towards a softer Brexit, and a softer Brexit is of course positive for the pound. There have been other reports that the UK government is willing to pay 20 billion euros in order to secure a transition agreement once it leaves the EU, though that hasn't been confirmed by Downing Street. But for now, it does look like Boris Johnson is staying. So the main focus now will be Theresa May's speech about Brexit in Italy. And ahead of that, we have retail sales data out of the UK later today, which might also possibly have some impact on sterling. Quick look at the Aussie and the Kiwi. Both of them are heading higher. The Aussie is doing well despite the fact that iron ore prices have seen sharp falls over the past few days. They've fallen more than 10% over the August peak, and more than 3% yesterday. They were down. The reason why the Aussie is doing well is because expectations that the RBA will start raising rates next year have been rising. Some analysts saying that the RBA will raise rates twice next year, so that's been supporting the Aussie. We can see it's climbed back about 0.80 level against the US dollar. The Kiwi is also up. It jumped higher after new polls out of the New Zealand show that the ruling National Party have maintained their lead over the Labour Party ahead of this Saturday's elections. Of course, a win for the National Party is positive for the Kiwi, whereas a win for Labour Party is negative because of uncertainty about what economic policies Labour might pursue. Also in support of the Kiwi this morning is the current account data, which showed us a much smaller than expected deficit in the second quarter. And yesterday's global dairy auction, we saw a 0.9% increase in dairy prices, which is of course a major export of New Zealand. So that's pushed the Kiwi to well above the 0.73 level. Looking at today's economic calendar, we did have Japanese exports data, which came in much stronger than expected. German producer prices were also slightly above expectations. Coming out shortly will be UK retail sales, and in the US session, before the Fed's decision, we will see existing home sales data. That's it from me. Thank you very much for watching, and have a great day.